Taxes. They have a way of eating up a significant chunk of your hard-earned money. But fear not, for there are legal methods to reduce the hefty tax bill. In this captivating video, I'm going to unveil those strategies and show you how to keep more of your precious moolah. I must confess, this topic has been in high demand, with many of you eager to learn about it. So without further ado, let's embark on this enlightening journey. Before we dive deep into the world of taxes, it's important to clarify that while I am a qualified accountant, I am not a financial advisor. My purpose here is to educate and enlighten, but it's essential that you seek advice tailored to the specific tax regulations in your country. If you're ready to take control of your taxes, let's get this show on the road. Welcome to Flourish in Fortune, your gateway to unlocking a life filled with prosperity and fulfillment. Let's start our tax adventure by unraveling the mysteries of how income tax is calculated. There seems to be a widespread misconception that the more money you earn, the higher the tax rate on your entire salary. However, that's not entirely accurate. Most countries employ a progressive tax system with different tax brackets. Allow me to shed some light on this. When you fall into a particular tax bracket, you are taxed at a specific rate only on the income that falls within that bracket. For instance, if you earn $60,000 and your country has multiple tax brackets, you will be paying different tax rates on different portions of your income. Understanding how these tax brackets operate in your country is crucial. It's worth noting that there may be additional nuances to consider, such as the loss of tax-free allowances when you surpass a certain income threshold. Now that we have a solid understanding of how income tax works, let's explore some marvelous strategies to minimize that tax bill of yours. One highly effective method is through pension contributions. By diverting a portion of your income into a pension plan or 401k, you can significantly lower your taxable income. Picture this: the money you contribute to your pension pot isn't subject to immediate taxation. Moreover, any investment gains within the pension account grow tax-free. So let's say your annual salary is $60,000. Instead of letting the taxman feast on all of it, you decide to contribute $500 per month to your pension. Guess what? That $6,000 contribution isn't taxed upfront, which means your taxable income shrinks to a more palatable $54,000. And the cherry on top, you end up paying less in taxes. It's like a win-win situation for your wallet. Another enticing avenue to explore is structuring your earnings through a company, especially if you have a side hustle or own a business. This can work wonders in reducing your tax bill. By operating as a business entity rather than an individual, you open the door to deducting legitimate business expenses from your income before the taxman comes knocking. Here's the exciting part. The corporate tax rate is often lower than the individual income tax rate, which translates into potential tax savings. However, it's crucial to navigate these waters with caution and ensure that you comply with the tax thresholds and regulations. We certainly don't want any unexpected tax surprises raining on our parade. And here's more: non-taxable income streams. This is where things get really intriguing. One extraordinary way to reap the rewards of tax-free income is by investing in tax-efficient accounts. For example, in Canada, you have the marvelous tax-free savings account or TFSA, while our Australian friends might be familiar with the enticing superannuation funds. These exceptional investment vehicles provide a shield for your profits and gains, keeping them out of the reach of the taxman. Although investing in these accounts won't directly reduce your taxable income in the current year, the real enchantment happens when you withdraw the funds in the future. You'll be able to revel in the delight of tax benefits. Of course, it's crucial to stay up to date with the specific rules and regulations governing tax-free investment accounts in your country. Keep a keen eye out for any updates or changes that may come your way. Stay informed and seize the opportunities that can help you maximize your tax savings. By the way, I would love to hear your thoughts and insights in the comment section below. Share your experiences, ask questions, or suggest topics you'd like us to cover in future videos. Your input is invaluable in shaping our content to best serve your needs. Now back to the video. Now that we've covered the core strategies for reducing your tax bill, let's delve into some additional tips and techniques that can further optimize your tax savings. By incorporating these strategies into your tax planning, you'll be well equipped to make informed decisions and navigate the intricacies of the tax landscape. 1. Maximize deductions. Take advantage of all deductions and credits available to you. Keep meticulous records of your expenses and ensure you claim all eligible deductions, such as those related to education, healthcare, home office expenses, and charitable contributions. By maximizing your deductions, you can effectively lower your taxable income. 2. Explore tax advantage accounts. In addition to the tax-efficient accounts mentioned earlier, there are other tax advantage accounts that can help you save on taxes. For example, in the United States, health savings accounts or HSAs and flexible spending accounts or FSAs offer tax benefits for medical expenses. Research and understand the various types of accounts available in your country and consider utilizing them to optimize your tax savings. 3. Capitalize on capital gains. If you have investments, understanding how capital gains are taxed can be advantageous. In some countries, long-term capital gains may be taxed at a lower rate compared to ordinary income. Consider holding investments for longer periods to qualify for these favorable tax rates and potentially reduce your tax liability. 4. Utilize tax-efficient investments. When investing, opt for tax-efficient investment vehicles such as index funds or exchange-traded funds or ETFs that have lower turnover. These investments typically generate fewer taxable events, such as capital gains distributions, allowing you to minimize your tax obligations. 5. Timing is key. Be mindful on the timing of your income and expenses. Strategically deferring income or accelerating deductible expenses into the following tax year can help you optimize your tax situation. For example, if you anticipate higher income in the current year, consider deferring a bonus or income from freelance work until the following year to potentially stay within a lower tax bracket. 6. Consider tax-efficient charitable giving. If you're inclined to give to charitable causes, explore tax-efficient ways to do so. In some countries, donating appreciated assets such as stocks or real estate directly to charities can provide additional tax benefits. Consult with a tax professional to understand the rules and maximize the tax advantages of your charitable contributions. 7. Stay abreast of tax law changes. Tax laws and regulations are subject to change, so it's important to stay informed. Keep an eye on updates from your country's tax authority or consult a tax professional to ensure you're aware of any new tax-saving opportunities or potential pitfalls. Remember, tax planning is a complex and ever-evolving field. It's crucial to tailor your strategies to your specific financial situation and consult with a qualified tax advisor or accountant who can provide personalized advice based on your circumstances. By staying proactive and informed, you can optimize your tax savings and keep more of your hard-earned money in your pocket. Now you've gained a wealth of knowledge on how to tackle your taxes and minimize that burdensome tax bill. Remember, taxes don't have to be an overwhelming and inevitable part of life. By implementing smart strategies such as pension contributions, structuring your earnings through a company, and exploring non-taxable income streams, you can take control of your financial destiny. And this is just the beginning. There's a vast array of tax-saving techniques and topics yet to be explored. Together, we can unravel the intricacies of offshore accounts, property tax, stamp duty, and so much more. Your financial well-being is within your grasp. Spread the word. Share this valuable information with others, and let's empower more people with the knowledge they need to conquer their taxes. Remember, this journey doesn't end here. Have you implemented any of these strategies? Do you have additional tips or questions about specific tax-saving techniques? Comment below and share your thoughts. Be sure to like, share, and subscribe to Flourish in Fortune for regular doses of prosperity tips, success stories, and actionable advice, so you can take charge of your destiny and unlock a life of abundance and fulfillment. Remember, your flourishing future starts here.